Every trader wants the holy grail, the perfect indicator, the secret setup, the one strategy that prints money while you sleep. But here's something that the greatest traders in history all agree on. The edge is not in the strategy. The edge is in the person executing it. Two traders can have the exact same system, the same entries, the same stops, the same targets. And one will be consistently profitable while the other blows up their account every quarter. The difference is not intelligence. It's not talent. It's discipline. And today we're going to break down exactly how to build the kind of iron discipline that separates the top 1% of traders from everyone else. This isn't motivation. This is a blueprint. Mark Douglas spent his entire career studying one question: why do smart people make terrible decisions with money? His answer was devastating in its simplicity. He said, discipline is not something you have. It's something you do consistently, especially when you don't feel like it. That second part is everything. Anyone can follow their rules on a calm Tuesday when the market is cooperating. But what about when you just got stopped out 3 times in a row? What about when that trade you skipped runs 200 points without you? What about when your P&L is red for the 3rd week straight? That is when discipline matters. And that is when most traders abandon it. Douglas called this the gap between knowing and doing. You know the rules. You wrote the rules. But in the heat of the moment, your emotions override everything you know. Closing that gap is the entire game. Jocko Willink, the retired Navy SEAL commander, has a phrase that should be tattooed on every trader's wall. Discipline equals freedom. It sounds like a contradiction. How can restriction be freedom? In trading, here's how. When you have a rigid daily routine, you don't waste mental energy deciding what to do. When you have strict risk rules, you don't agonize over position size. When you have a defined playbook, you don't chase random setups. The discipline creates the structure, and the structure frees your mind to focus on the only thing that matters: execution. Most traders think discipline means suffering. It means saying no to fun trades. It means missing opportunities. But the reality is the opposite. Discipline means you sleep well at night. It means your drawdowns are controlled. It means your equity curve doesn't look like a heart attack. Discipline is not the cage. It's the key to the cage. So let's get practical. The first pillar of trading discipline is the pre-session routine. This is what you do every single morning before you open a chart. And I mean every morning. Not just Mondays. Not just when you feel like it. Every single session. Here's a framework used by institutional traders at some of the top prop firms in the world. Step 1. Review your watch list. What instruments are in play today? What are the key levels? Where is the liquidity? Step 2. Check the economic calendar. Are there any high-impact news events that could blow through your stops? Step 3. Write your trading plan for the day. Maximum 2 to 3 setups. Maximum daily loss. Maximum number of trades. Step 4. Rate your mental state on a scale of 1 to 10. If you're below a 7, reduce your size by half or don't trade at all. This takes 15 minutes. 15 minutes that can save you thousands of dollars in impulsive losses. Tom Hougaard, one of the most successful independent traders in Europe, said something that changed my entire perspective on this. He said, "The amateur trader focuses on making money. The professional trader focuses on following the process. Money is a byproduct." Read that again. Money is a byproduct. The moment you stop obsessing over your P&L and start obsessing over your process, everything changes. Did I follow my entry criteria? Did I respect my stop loss? Did I size correctly? Did I take the trade my plan told me to take? If the answers are yes, then it was a good day, even if you lost money. And if the answers are no, then it was a bad day, even if you made money. This is the hardest mental shift in trading. because our brains are wired to equate profit with success. But in trading, the only sustainable measure of success is process adherence. The second pillar is the trading checklist. Airline pilots use checklists before every flight. Surgeons use checklists before every operation. These are some of the highest stakes professions on the planet, and they use checklists not because they're forgetful, but because they know that under pressure, even experts skip steps. Your trading checklist should be simple, 5 to 7 items maximum, taped to the side of your monitor where you cannot ignore it. Here's an example. Is this set up in my playbook? Am I trading with the trend or against it? Is my risk to reward at least 2 to 1? Is there a news event in the next 30 minutes? Have I already hit my daily loss limit? Am I trading to make money or to make back money? That last question is the most important one on the entire list, because if the answer is to make back money, you already know what to do. Close the platform. Walk away. Ed Seykota, the pioneer of computerized trend following, turned $5,000 into $15 million over 12 years. When people asked him his secret, he didn't talk about his algorithm. He said, "The elements of good trading are cutting losses, and cutting losses 3 times." The same answer, because Seykota understood that the discipline to cut losses is the hardest thing in trading, and it's also the most important thing. Every blown account shares one thing in common. The trader didn't cut when they should have. They held. They hoped. They moved their stop. They averaged down. If you want to build discipline, start here. If you're not subscribed to this channel yet, hit that subscribe button. The content we put out is designed to build exactly this kind of mental edge. Start with the discipline to honor every single stop loss. No exceptions. The stop gets hit, you're out. Period. The third pillar is accountability. And this is the one that nobody wants to talk about, because accountability means admitting that you are the problem, not the market, not your broker, not the algorithm that hunted your stop. You. The most disciplined traders I know all have some form of external accountability. Some have a trading partner they share their journal with. Some post their results in a private group. Some hire a trading coach. The format doesn't matter. What matters is that someone else sees your trades. Because when you know someone is watching, you behave differently. You think twice before taking that revenge trade. You hesitate before moving your stop. You pause before sizing up out of frustration. Jesse Livermore once said, "The market is designed to fool most of the people most of the time. But the person who fools you the most is not the market maker or the algorithm. It's the trader in the mirror." Let's talk about the science for a moment, because discipline is not just a character trait. It's a finite neurological resource. Researchers at Case Western Reserve University found that willpower operates like a muscle. It fatigues with use. This is called ego depletion, and it has massive implications for traders. Every decision you make before your trading session drains your discipline battery. What to eat for breakfast, what to wear, whether to answer that email, whether to check social media. By the time you sit down at your charts, you may already be operating at half capacity. This is why the most disciplined traders ruthlessly simplify their lives outside of trading. They eat the same breakfast. They wear the same clothes. They eliminate trivial decisions so that when it's time to trade, their full mental capacity is available for the only decisions that matter. It's not obsessive, it's strategic conservation of willpower. The fourth pillar is the post-session review. This is where discipline compounds. After every trading session, spend 10 minutes reviewing your trades. Not the outcomes, the decisions. For each trade, ask yourself 3 questions. Did I follow my entry rules? Did I manage risk according to my plan? Was my emotional state clear when I pulled the trigger? Then give yourself a discipline score for the day. 0 to 10. Track it on a spreadsheet. Over 30 days, you'll have a discipline curve that tells you more about your trading future than any equity curve ever could. Ray Dalio calls this the habit loop of improvement: pain, reflection, progress. You trade, you review, you adjust. You trade again. Each cycle builds on the last. And over time, the disciplined decisions become automatic. They stop requiring willpower. They become who you are. Now, here's where most traders fail. They build discipline for a week, maybe two. They follow their routine. They use their checklist. They journal every trade. And then one morning, they're running late. They skip the pre-session routine. They take a trade without checking the calendar. It works out. They make money. And their brain immediately files that under proof that the routine doesn't matter. This is the most dangerous moment in a trader's development, because the market just rewarded you for breaking your rules. And now your brain has a shortcut. Skip the process, still get paid. Tom Hougaard warns about this specifically. He says the market will occasionally reward bad behavior. And that's exactly how it traps you. One undisciplined win creates 10 undisciplined losses. The discipline must be non-negotiable, not because every rule break leads to a loss, but because over 100 trades, over 1,000 trades, the trader who follows the process will always outperform the one who doesn't. Let me give you a 30-day challenge. Starting tomorrow, commit to this framework for 30 consecutive trading days. Morning, 15-minute pre-session routine. Write your plan. Rate your mental state. During session, use your checklist before every single trade, no exceptions. If you don't check every box, you don't take the trade. After session, 10-minute review, 3 questions per trade, daily discipline score. Here's the rule that makes it work. If you miss one day, you restart the counter. 30 consecutive days. This sounds harsh, but it's the same principle that builds discipline in every high-performance field. Navy SEALs train this way. Olympic athletes train this way. Concert pianists train this way. Consistency is not glamorous, but it is the only thing that actually works. After 30 days, you won't need to think about it anymore. The routine will be automatic. The discipline will be part of your identity. I want to close with something that Jesse Livermore wrote over 100 years ago. He said, "There is nothing new on Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again." The same is true of discipline. Every trader before you faced the same temptations, the same urge to overtrade, the same pull to abandon the plan, the same voice that says just this once. And the ones who made it, the ones whose names we still remember, are the ones who said no. Not once, not when it was easy, but every single time. Discipline is not a talent you're born with. It's a skill you build. One session at a time, one trade at a time, one decision at a time. And every time you choose the process over the impulse, you're not just protecting your account. You're becoming a different kind of trader.